September's non-oil domestic exports grew by 2.7% on year. This was below expectations as market analysts had forecast double-digit growth. It is also a significant drop from the 10.7% expansion the previous month. Now, experts say it could be due to a contraction in the manufacturing sector of developed markets like the US and eurozone and China's weak domestic demand. Nadirah Zaidi with more.
From 10.7% growth on year in August to 2.7% in September. Experts say Singapore's non-oil domestic exports missed the mark significantly.
I think what I'm concerned about is that after strong growth in the previous months, we are starting to see more stabilization. And the next year's outlook, because of high base effects, it could be more downcast compared to what we've seen a few months ago.
He added that some of the manufacturing sectors are starting to see some signs of a slowdown, and that may signal less robust external demand from economies such as the US and eurozone. Another analyst isn't too caught up with the month's numbers. Instead, he's tracking trends in the electronics sector, which grew 4% compared to 35% in August. This growth is driven by steady demand for disc media products, personal digital devices, and integrated circuits.
But it's being driven by a very specific reason, and that's AI. Now, the question you have to ask yourself is how long this could last. Typically, you can go into bubble territory, in which case it could last longer. But I think we may be looking at, if you look at some of the other countries, and if you look at semiconductors, etc., I think you may be seeing maybe not a downturn, but a leveling off of the growth process from here.
Meanwhile, non-electronics sector grew 2.3% because of high demand for pharmaceuticals, specialized machinery, and other specialty chemicals. In the previous month, it grew 3.6%. Experts are cautiously optimistic on continued growth due to the general slowdown in major economies like China.
They have some serious structural issues that they need to deal with. I mean, there's an aging population, there's a decline in productivity growth. If I go on the other side, there's huge excess capacity, there's a housing problem, etc. They will have to deal with it. It's not going to be that easy to deal with. It's going to take a few years.
And while China has introduced some stimulus measures, they may not have an effect on Singapore.
I see some positive upsides, but they are likely to be fairly limited because the majority of China's stimulus policies are meant to restore domestic demand, and domestic demand may mean demand for its own products rather than exports from Singapore or other economies.
Looking ahead, market analysts see geopolitical tensions in the Middle East and potential changes in US trade policies as risks to Singapore's export figures and supply chains.